So welcome everybody, Monday of a fresh new week of 2021. And first and foremost, thank you so much for taking time. We know that the PPP program is vitally important to many, many people. So we're going to keep it very short on the talking heads, and we're going to get right into the information at hand here. So with that, I want to introduce Maceo Wiggins from he's the director of the BART Office of Civil Rights. So Maceo, if you can kick it off here and welcome everybody from BART.
Of course. Thank you, Paul. And welcome everybody from the San Francisco Bay Area Rapid Transit District. I will be brief because no one is here to hear me speak, but everyone's here to hear Julie and our colleagues at the SBA share the information they have with us. So I would just like to thank Paul and the Small Business Support Services team that works with us here in OCR, and the OCR staff who are joining us on the call. Thank you everybody also for joining us to hear this information, and a big thank you to our colleagues at the SBA for taking time out of their busy days and their busy schedules to sit with us and share this information.
Okay, thank you, Maceo. Really quick, Maceo, I want to have Michael advance the next slide. Here's our agenda. Just so everybody knows, the BART Small Business Support Services Program is open to everyone. It's free to everybody. We've got pre-award and post-award, and a lot of our pre-award does involve working with the SBA, the California Department of General Services, and all the different resources. We know we have people from Asian Inc. on the phone today, the Minority Business Development Agency, a lot of really great resources that we tap into for the pre-award program. So with that, as Michael advances the slide, I want to introduce Julie Clowes from the SBA. And Julie, I believe you've been on board since 2017, if I'm not mistaken, and has been such a magnificent resource, really a person who's an expert, who is so willing to give her time very graciously. And I know for a fact that when questions come up that are customized, Julie has taken her time to personally answer those questions. So we're very grateful, Julie. So I'm going to turn it over to you to start your presentation on round 2 of these vital programs. So thank you, Julie.
Thank you, Paul, and to Maceo and the whole BART team for the invitation to speak today. Really do appreciate the ability to tap into your platform to present some information. If we can advance probably a couple of slides here, then we can go one more, and we'll go to the third. Here we go. We are starting to launch some of the new programs and teeing up some of the other new programs that were results of the most recent legislation. So I want to take a little bit of time to go through each of these and give you kind of updates as to where they are, but then we will spend the bulk of our conversation today on PPP. But first, just to make you aware that, so you know, some of the other programs that are out there, as we have stated before, if anybody had any pre-existing SBA disaster loans, now these are the non-COVID loans, so these would be from wildfires or other incidents that may have happened pre-COVID, and you had a loan with SBA, those payments have been deferred, and the deferral is now extended for another 3 months till the end of March. That's happened automatically. We are also, through this latest legislation, reopening the SBA debt relief program. So this is people who had existing SBA loans, whether it's 7A, 504, microloans even. SBA was paying principal and interest on those loans. Originally, it was for 6 months. And then when that program ended, now we're going to do another 3 months of payments. So the specific details on how that might happen are forthcoming, but if this is something you will work with your lender, and they will make sure that you are enrolled in this program so that you can have principal and interest for 3 months paid by SBA. So the other program that has been kind of the complement with the PPP is our EIDL program, the Economic Injury Disaster Loan. This has been ongoing. This program has not started and stopped. It is still ongoing, and it is now actually extended for another calendar year, so through December 31st of this year, 2021. assuming there's still funding in the program for that length of time. And this is the complement to PPP, and that this is a working capital loan. So PPP is more focused on payroll and being able to cover those expenses. EIDL allows you to cover any working capital expense you have as a business owner. So it's more broad, and you can, like I said, use those funds in any way you need to support your business operations. It is a loan. There is no forgivable portion of this loan. It is a traditional loan, but it is very favorable. Right now, the interest rate is 3.75% for 30-year term. And that 30-year term is automatic for the COVID EIDL. So if you are looking for more traditional working capital to support your business because you've been affected by COVID, this is a program you would like to look into. And the application and everything is available on our website. It's very streamlined. You apply everything online, and this is direct through SBA. So it's a little different than the PPP that we're going to talk about in a few minutes, and that's through the lenders. EIDL is direct through SBA. The other program that is coming soon is the EIDL grant. So we had this previously over the summer. It was called EIDL Advance at that time, and that was that basically a forgivable loan or grant up to $10,000. So that program was opened and ran out of money, as you can imagine. That program is coming back. I do not have a start date yet for when people will be able to apply for this, but what is my understanding from the legislation and the team of what's going to happen is that everyone who received an EIDL advance, if they did not get the full $10,000, SBA is going back and giving them, making a payment to pay the difference between what they received and $10,000, so that everyone gets the full $10,000. And then the program will also be opened up for new applicants. So these are people that, to my understanding, did not receive an EIDL advance in the first round. They can apply for one in the second round, and these will be $10,000 grants, essentially, coming direct from SBA. So that one is one we're waiting for more information, and as soon as we know when that portal's open and when you can apply, we will be blasting that information out as well. And then I'm going to talk briefly about Save Our Stages, as you may have heard about this one as well. This is a brand new program. It is a grant that is going to be coming out, made available soon. Again, this will be direct from SBA. It is also being facilitated by our disaster team. And it is for, I put in on the slide, because I can never get the full list correct in my brain, the live venue operators, promoters, theatrical producers, live performing arts, museums, zoos, aquariums, and those kinds of facilities that have been shuttered due to COVID. And this will be a grant, and the details and the application process and all of that is forthcoming. So again, please watch out, and as soon as we have additional information or know when that application is available, we will again be blasting that information out as well. But what is opening up today is PPP in somewhat of a limited fashion today. So there's some terminology I want to make sure everybody understands with this round of PPP. We have what's called a first draw loan or a second draw loan. So first draw loan simply refers to the very first time you apply and receive a PPP loan. So it could have already happened for you back in 2020, or maybe you've never applied and you're now a first-time applicant here in 2021. That's also considered a first draw. So the first draw could have already happened or is something you're applying for. First draw just means it's my first time applying for PPP. Second draw, then as you can imagine, is people who have already received a PPP loan and now are looking for a second PPP loan. So two new terms that are important to understand the differences. What opened up today, this morning, was the first draw PPP loans, but we're narrowing it to only community financial institutions, CFIs, are the organizations that are eligible to submit applications today and tomorrow. So CFIs are the types of organizations you see on the screen, the CDFIs, the minority depository institutions, CDCs, and micro lenders. So they have a window right now, today and tomorrow specifically, to submit first-time applications from borrowers to SBA. On Wednesday, they're going to open up the portal for the second-time applicants for a PPP loan. And again, it's still just from this community financial institutions. The portal then will open up to all participating lenders a little bit later on, either this week or early next week. I don't have the exact date yet, and that is information, again, we will be blasting out soon. But in an effort to make sure some of our smallest of small businesses and others had the opportunity to apply, the first wave starting today is reserved for community financial institutions to submit applications from their borrowers to SBA. So the eligible entities largely stays the same, although we have added through the legislation a few more types of eligible entities. So, any form of small business, as long as they're a small business, and they have been in operation since February 15th of 2020. Any sort of self-employed or independent contractor is still eligible. Nonprofits, we have expanded that list a little bit per the legislation. So 501c3s, 501c19s still eligible, and we've added 501c6s. So that was the chambers and some other types of organizations that fall into that category. As are different types of cooperatives eligible to apply, whether electrical, telephone, and housing. Another new one is a destination marketing organization, which could be under the 501c6 umbrella as well. As long as they don't have more than 300 employees, they can be a nonprofit or a quasi-governmental type entity that's really engaged in the marketing and promoting of a community or a destination, if you will. Obviously, tourism has been heavily hit as a result of COVID. So this is these types of organizations that work in that world, promoting a specific, geographic area, etc., are now able to apply. As also our news organizations, and I put the NAICS codes up there because it is limited to those specific NAICS codes, which is largely looking at broadcast and print, and I think some radio is also included in there. So again, these are all small entities, though. Our SBA size standards apply, or you can see a couple instances, there's even a more narrow size standard, like with some of the cooperatives and the destination marketing organization with a maximum of 300 employees. So a few more eligible entities. This is the terms and conditions. So if you're already familiar with the program, you'll see that it's largely the same. There hasn't been a lot that's changed about the terms. So the covered period, this is the period of which you spend the loan funds, can be 8 weeks or 24 weeks or something in between. And you don't necessarily have to designate this at the time you apply, but just know in your head it's a minimum of 8 weeks and a maximum of 24 or somewhere in between. Interest rate is still 1%. The loans do now have a 5-year term automatically. And still there's no collateral requirements, and we are still leveraging participating lenders. So all the lenders who participated in round 1 or over the summer with PPP are eligible to participate again. Some may decide they're not offering it, and some may not be able to because they might be a much smaller organization and they just are still working with the round 1 loans and they might not be in a position yet to offer. We are trying to survey the market and figure out which lenders are going to be able to participate, and we hope to be able to put out a list publicly to help you filter through which banks are actually able to participate right away, especially when this opens up, when the portal opens up for all lenders to submit. The biggest thing you can do right now is if you have a banking relationship, go ahead and check that bank's website. A lot of them have already posted that they are going to accept second round or are going to participate in the next round of PPP. So you can get some information immediately that way, or else as we obtain more information, we will also be pushing that out. You'll see from the terms that 60-40 split we've always talked about. In order for the loan to be forgiven, you need to still spend at least 60% on payroll and no more than 40% on non-payroll. And for those who maybe weren't aware, if you want some help figuring out how much you can be eligible for under this program, there is a calculation sheet. When you get a copy of this presentation afterwards, I'll take you to a link where that is posted on our website, and you can follow along. It gives you lots of great examples for different forms of business and different kind of scenarios, people with and without employees. So it's a really helpful tool to help you figure out how to calculate how much you're eligible for. I did see an eligibility question, sorry, about 501c4s. As of this time, that was not included in the legislation, so 501c4s would not be eligible for the PPP program. The EIDL expenses, PPP expenses, they're largely the same again. What can be covered under payroll? I don't believe we really had any changes. Still salary in any way, shape, or form that you pay yourself or others, again with that $100,000 maximum per employee. Again, leave, benefit programs you may offer your employees, state and local taxes, not federal, just state and local. The non-payroll cost, that list has expanded a little bit through the new legislation. So not only is it mortgage interest or other interest on debt that you've already had, rent and utilities, but we've also added operations expenditures. So this is those things that help keep your business going, right? These are, if you have software services you need to subscribe to, if you have accounting or payroll services you pay, any kind of operational expenses that keeps your business humming along. That also can be included in this if you had to make repairs, property damage based on any of the public disturbances or civil unrest we've had over the summer. Also, supplies. So now supplier costs can be included in the non-payroll costs. Again, these should be like ongoing and essential things to keep your business open. This isn't a chance to go buy something new, but it is the kind of the essential supplies that you would normally be ordering and utilizing. And then also worker protection. So PPE, if you need to provide that to your employees, if you need to get some of those physical barriers, the sneeze guards, maybe you have ability to do outdoor, like drive-in window or walk-up windows, and you need to enhance those, anything you need to do as far as under the protection for you and your employees and the public. So a little bit expanded list there. But again, remember, for purposes of forgiveness, you still got to watch that 60-40 split if you want the loan forgiven. So only 40% of your loan proceeds can be spent on these non-payroll costs. Let's talk a little bit about the second draw loans, because I know there's probably lots of questions from people who got their first one and now are interested in the second one. And there is a rule out that talks specifically about the second draw loans and has a little bit more detail and some examples than we probably have time to go into today. But to be eligible for the second draw loan, obviously you have to be one of those eligible entities that we just talked about. You also have had to have received a loan successfully under the, whether it was last year, and you not only did you receive that first loan, but you've used up all the funds already. So you can't have lingering funds left over. You need to have used them all. The size standard does shift for the second loan. We're looking at smaller business, smaller businesses in the spectrum of small businesses. So the maximum number of employees is 300. So the traditional size standard does not necessarily apply in this case. We're looking for businesses that have 300 employees or less for the second draw loan. And then we are going to look at a comparison between 2019 and 2020, your gross receipts, your revenue, and to show that there's at least a 25% reduction from 2019 to 2020. There's lots of different ways this can be demonstrated, and you'll see it's in the legislation. It does say by quarter, so you don't necessarily have to do a quarter by quarter comparison. I mean, the quick way is to look at your 2019 gross receipts in your 2020, and if for the year it's automatically 25% less, you're covered, right? So you're fine. You don't have to worry about any other calculations. If you had kind of a mixed year, maybe you started off really slow and then you maybe picked up in the fourth quarter, but maybe quarters 1, 2, or 3 were showing a 25% reduction in your receipts compared to where you were in 2019, you can leverage that quarter to demonstrate that you have a 25% reduction, at least a 25% reduction in your gross receipts. So again, if it's 25% difference for the year, that's super easy. If you didn't and you had just maybe 1 or 2 really bad quarters, you're going to have to do some breakouts of your 2019 gross receipts for, by quarter versus your 2020 receipts by quarter to show that at least one quarter had a 25% reduction in your revenues. And again, if you want to go to the rules, there's some more examples and some calculations. It might help you understand this a little bit better if it's really confusing. Under the second draw loans, the maximum anybody can receive is $2 million. And it's the same calculation, basically. It's the quick and dirty math is it's 2.5 times your average monthly payroll. And you can pick payroll from 2019 or 2020. So whichever is most advantageous to you. So again, you can look at your average monthly payroll from 2019 or 2020 for purposes of this second draw loan. If you are in the accommodation and food sector, that means your NAICS code starts with 72. You may do 3.5% per times your average monthly payroll. So because this sector has been hit particularly hard, they can have their multiplier can be a little bit more, so they can obtain a little bit more funding under a second draw loan if they so desire. And you will see that there is a new form for the second draw loan. So that we have 2 different application forms, one for the first draw loans and one for the second draw loans. This is just a quick outline of what we have up on our website as of this morning, at least. More information is going to be forthcoming, but I did want to quickly show you the forms are there for the first and second draw loans, and 2 new guidance documents, interim final rules, one for PPP program, kind of globally speaking, and then one specific to these second draw loans. And I do expect, again, more information, more interim final rules will be revealed as we continue on in the next couple of weeks. And also maybe some supplemental guidance documents, like that how to calculate my PPP loan kind of guidance documents. So please keep watching our website. That's what we do in the district as well. We go and look every morning to see what's new and what's been posted so that we can go out and talk to you all about that as well. The next slide, I was going to talk to you a little bit, just quickly, I'm going to hit on some forgiveness aspects because I'm sure we have a lot of people who are still in the forgiveness process as well from their PPP loan from this summer. And so that is still moving forward, obviously. And as the rule states, you don't necessarily have to have your first PPP loan forgiven before you can apply for your second, but you do have to have used up all the funds. So you could be someone who's in the process of applying for forgiveness on your first loan and maybe looking to apply for the second loan as well. So again, we just kind of hit on some of these terms, so I won't go into this in too much detail, but the 60-40 split is still what you got to look for. You've got to make sure you spend at least 60% of your loan proceeds on payroll and no more than 40% on the non-payroll costs. You can spend 100% on payroll. That's okay. The 60% is a minimum. And again, the types of costs, the payroll costs have largely stayed the same. So the forgiveness process, did want to quickly outline what that process looks like, because I know we've had a bunch of calls and sometimes there's a little bit of confusion. You do please need to submit your forgiveness application to your lender. Please do not send it to the SBA district office. We're not able to process those direct. It does need to go to your lender. Your lender is then going to evaluate your package, and your package should not only be the forgiveness application, but it should also include all the supporting documents. And this is supporting documents to demonstrate how you spent the money. So for payroll, for example, it can be copies of checks if you still write checks to employees, or it can, if you use a payroll service, it can be, you know, printouts or reports that they can run for you. If you have like an ACH setup where you can automatically directly deposit into people's accounts, you'll want to show evidence of those transactions that took place during your covered period. Likewise, for any of the non-payroll costs like utility bills and things like that, you're going to want to have copies of that, and maybe copies of canceled checks or wire transfers of payments to demonstrate that you also used the funds to pay for those expenses. Again, just for your covered period, whatever covered period applies to you. So bundle all of that documentation up, submit it to your lender, and the lender is then going to evaluate it, and the lender is actually going to make the decision on what is forgivable, if 100% forgivable or is only a portion of it forgivable for any reason. The lender will make that decision, and then the lender will send that information to SBA through a specialized portal that the lenders have access to. And then SBA is going to, we're not necessarily reviewing every single file. There's definitely, you know, taking in the information, and SBA is in its own discretion, you know, selecting some files to take a deeper dive review, but not every single forgiveness application that hits SBA is going through this in-depth review. But some are. But SBA will do its due diligence and look at what it needs to look at, and then it will remit funds back to the lender for the forgiveness portion. So either 100% or a portion thereof, depending on the circumstances. If it's not 100% forgiven, at that time, once the lender receives communication from SBA, the lender will reach out to you as a borrower to say, this is the portion that was not forgiven, and here it'll be converted into a loan, and at the 1% and the 2-year or the 5-year term, depending on when you originally obtained your PPP loan. So you as a borrower, you won't necessarily have a term loan that you might have to start making payments on until this entire process is completed. So we are asking for a little bit of patience with this, because the lenders, once you submit to the lender, they have up to 60 days to review and submit to SBA, and then SBA can take, you know, 90 days or so to process and remit payment back to the lender. So the process can take a little bit of time. I will ask people, now we know with the legislative changes, the EIDL advances are not being subtracted from the forgiveness amount. So you'll see on the form, though, the forgiveness form, it does ask you to note if you had an EIDL advance. Those forms may be updated, but as of today, if you pull the forgiveness form, it's still going to have that question on there. You can put in the amount if you want, it doesn't matter, but please do not go ahead and subtract it for any reason. Please do not subtract the EIDL amount from your overall loan, because with the new legislation, we no longer need to do that. And two, we might not realize that you subtracted it and think that the bank maybe did something that it made a determination that your forgiveness is not 100%, and it might just make things more complicated and a little messier. So please do not subtract your EIDL advance amount. And then also the other thing we're seeing and hearing from a lot of borrowers is they maybe are forgetting to attach some of their supporting documents. So please, if you're going through the forgiveness process, take an extra, couple of minutes, make sure you have uploaded and attached or provided, if you're mailing in, all of those supporting documents to the lender so that the process can go as smoothly and as efficiently as possible. So these are the forms as they exist today. Now, again, everything is current as of the moment I'm talking to you about it. These forms could potentially be updated. This form that I would think will probably be updated is the 3508S, because the new legislation also enabled SBA to do a much more streamlined forgiveness process for loans that were $150,000 or less. So as the form exists right now, it's for loans of $50,000 or less. It's a very streamlined one-page application. I expect, like I said, that might change, but as they exist today, this is what you will find on the website. You will see there are 3 types of forgiveness forms that exist today. The 3508S being for $50,000 or less. Doesn't matter your form of business or anything. The litmus test, if you will, is the size of your loan, $50,000 or less. The next category is the EZ form, 3508EZ, and this does have a couple, to be eligible to use this form, you could be self-employed, or if you have employees, basically when you're looking to apply for forgiveness, you will note that things really haven't changed for you, or if they have changed with your employees, you're covered by one of the safe harbors. So when you read through the form, you'll see checklists to say that this or applies or does not apply to you. But the quick way to think about the EZ form is your circumstance with your employees, nothing really changed. You either brought everybody back and were able to pay them for the same number of hours at the same pay rate, or one of the safe harbors covered you and made you whole, so to speak. So that meant you could, do a reduction of not more than 25%, or you offered employees their job back, but they refused to come back for any number of reasons, or you maybe did not reduce the pay by more than 25%, but you still had difficulty returning back to, quote, normal operations, pre-COVID operating levels. So there's different safe harbors that kind of don't penalize you if things happen in your business and you're not able to bring employees back. You won't necessarily be penalized, so to speak, from forgiveness if these safe harbors cover you. The thing with the forgiveness process, if you look at the rules, you don't have to apply for forgiveness right away. So if you're somebody who's got the first round PPP loan, the first draw loan, and you haven't yet applied for forgiveness, you have a bit of a time period. You actually have 10 months after your covered period ends in order to apply for forgiveness. So because we're in this new phase where we're probably going to have some revamped forgiveness forms and some other things coming out very quickly over the next week or two, you might want to wait until those new forms and any new guidance documents come out before you engage in the forgiveness process. But if you do not want to wait, you can go ahead and utilize the forms that are up there today. So here's some list of resources or ways to contact us. Here in San Francisco, one of the best ways is our mailbox, SFO mail at SBA.gov. We do have teams that are monitoring it constantly and trying to address the inquiries that come in there as quickly as we can. As you can imagine, when these programs reopen, we do see a big uptick in inquiries, so please be a little patient with us. We're getting to all the questions as quickly as we can. You can also, if you've not signed up for our local newsletter, you can do that through our district office website. It's a great way. We blast out the information as it becomes available. So if you want to just get the information delivered to your email box, please go ahead and sign up for our newsletter. And then also, if you haven't taken advantage of our resource partners, or if you're someone who's kind of struggling with not sure quite how to put my package together, I have some really specific questions because I think I have a very different, business format, or things have happened to me and I want to talk to somebody about that. Our resource partners stand ready. Free business advising. You will never be charged for them to work with you, whether it's about COVID, financing, other financing, or any other business topic that you have that you want support and have questions about. Our NorCal SBDC even has a financing team that has a hotline and an email box dedicated to addressing a lot of these COVID-related financing issues you might be having. And then again, our website, sba.gov/PPP for that program, or it's sba.gov/disaster to get to the COVID EIDL, and presumably as soon as it's relaunched, the COVID EIDL grant. So that was a lot of information that I just threw at you, and I know you guys all have a lot of questions.
Great. Well, Julie, thank you. First and foremost, before we get into the Q&A, can you just share the rapid way this information is coming out to you guys, and then also explain Marlo's role, because Marlo's been answering some questions?
Sure. So because these programs are not well, I guess you could say PPP was sort of pre-existing, but these are all pretty much new things for SBA or new tweaks and enhancements to existing programs. So in an effort to get them opened as quickly as possible so that you can start utilizing them, you'll notice we put information out in waves. So it kind of starts with the application, and then we progress into the other phases, including forgiveness. So that is why the initial wave of information is just more about the program, and the second draw loan and how you apply. The information is always publicly available on our website. That's honestly where myself and Marlo, my team member, we get most of our information that way as well. It's kind of real time. These websites are updated. I think it's probably safe to say between now and the end of the month, they're probably going to be updated daily with new pieces of information. And as the other programs become available, that information will be publicly available on our website as well. So that's one place to watch. And again, we're trying to push this information out as quickly as we learn it as well and digest it. I read, over 150 pages of rules this weekend, trying to make sure I understood everything so I could talk to you all today, and that will keep coming. We do have a small team here in San Francisco. We're based physically in San Francisco, but we cover Santa Cruz all the way up to the Oregon border. Marlo is one of the team members. She's our supervisor lender relations specialist. So she has been working not only with borrowers, but she also works largely with our lending community as well, because this program is new for our lenders too, right? So they have a lot of questions, and trying to make sure they get their questions answered from a more technical side, usually using some of the new portals that were created in order to capture this information. Then we also have some what we call outreach and marketing specialists that are available, and they're the ones helping to staff and man the email and the phone lines to answer your questions. We are all working for you. The best way to reach us though is through the phone and email, because we are largely working virtually because of COVID and the resurgence we've had here. But we are absolutely all working and ready to try to help you as best we are able.
Great, thank you. And I'll unmute some people as we go along, but I know our good friend Holly Thier from the Thier Group had one of the questions early on, which was in regards to what are the financial institutions which, who are the lists who can accept applications, the CDFIs and that sort of thing. And I know our good friends at Asian Inc., I believe, listed some links, but where can somebody go to get that list of who's on that roster?
Yeah, the list of the lenders, and I use that term very broadly. This is not only our traditional banks, but our CDFIs, a handful of our micro lenders participated, and also some online lenders, so non-traditional lenders. The original list is still posted on our website, the district office website of sba.gov/ca/SF. We're hoping through conversation with some of these lenders to kind of figure out, and I'm hoping actually out of our headquarters, at least for the national lenders and some of the other program lenders, the online lenders, et cetera, that they will provide us with a list so that we can then in turn share that information out with everybody, so you know who's participating But I do say the first thing is I would go, if you have a banking relationship with someone, I would first go to their website to see what they're announcing and how they're going to participate, if they're going to participate. And if that bank for any reason is not able to participate, and then we can, try to help you find another source.
Julie, like round one, I know one of the big concerns was some of the banks, if you didn't already have an account with them, you kind of went to the back of the list. Do you think, is that going to happen differently now?
Some of the banks may still opt to do that. That wasn't something that's addressed through the legislation. That was something that banks chose to do. And I think a lot of that had to do with some of the banking regulations and some of the things that we don't think about that the banks have to do behind the scenes as far as vetting and other procedural things with their bank customers. But in order to help kind of overcome that, if you will, that's why SBA started onboarding a lot of other types of financial institutions so that we could hopefully provide a really wide spectrum of different types of lenders so that people would have access. And that includes the online lenders. The online lenders, they don't have standard checking accounts and other things, so people typically don't have or need a pre-existing relationship. So online lenders is one source, and sometimes the CDFIs. We also onboarded a lot of credit unions, that were capable of doing lending. So there's lots of different paths. It's not just the traditional banks that you might think of. There's a lot of other financial organizations that offer lending.
Okay, and then Amy asks, will participants be informed when EIDL opens up again, or is it on us to keep track of that?
Well, the regular EIDL loan already is open. It never shut down. So if you would like to apply for the regular EIDL loan, you can do that right after this webinar. The EIDL grant portion, the $10,000 grant, was refunded. So that's going to reopen, and I don't have the date, but yes, that'll be announced as soon as we know the date.
Okay, and then 501c4 type organizations, did I see that those were included as well this time?
They are not included in the PPP program. It was just expanded to 501c6s, which is usually a chamber type organization, but not the fours. Because do be cognizant of, it's been a long time since I had tax law, but from 501c4 designation is typically organizations that do focus on lobbying, and lobbying is one of the prohibited activities. You cannot use PPP funds for lobbying efforts. There is a minimum threshold. I think if you're a 501c3, that less than 15% of your revenues or expenses can be attributable to lobbying. But the emphasis is really supporting the organization and its core efforts and its people, paying its people.
Okay, great. And then Dorleen Jones is on the line. She actually had a question regarding trucking. She has a trucking firm, but she wants to know, can she apply for both the PPP and the EIDL without any penalties?
Yeah, people can apply for both. We just ask that they're not used for the same purpose at the same time. So if you already had an EIDL loan, for example, maybe you defaulted to EIDL after PPP shut down in August, and you have an ongoing EIDL loan, you can still apply for PPP. Just make sure you're not using it to cover the same expenses during the same period of time. Really easy way to do it, especially if you're a business that has some employees. Go ahead and use all of your PPP funds for payroll and use your EIDL loan for everything else. That's one really simple way to differentiate, but it's incumbent on you to make sure that you're not using them both for the same time. I will note it does say in the I think it's in the legislation that the Save Our Stages grant that's forthcoming. Again, that's a narrow targeted industry, but the Save Our Stages grant, if you get a PPP loan, you cannot also get a Save Our Stages. So if you had a PPP loan and you used it all up, and you now want to apply, you're a venue that qualifies for Save Our Stages, I believe you'll be able to apply, but you couldn't then apply also for a second round PPP loan and obtain the Save Our Stages grant. That's the one I know you can't double dip, so to speak. But
okay, great. And then they apply apply for the PPP if they weren't in business until September 2020? I know that's been a hard time for startups, but what is the status if you literally opened up your business in September of last?
Yeah, so the business did have to be operational as of February 15th of 2020. So if you opened up afterwards, you would not be eligible for PPP. Unfortunately, that's just the cutoff point that was put in the legislation.
Okay, and Mike asked a good question, which we get a lot, is can you refresh us on what's the maximum per employee again?
So when you calculate your average monthly payroll, you'll have to make sure that no individual employee is receiving more than $100,000 in salary. That's kind of the cap. So if you have any employees that make more than that, for purposes of calculating your loan, you will need to cap them at $100,000 for the year.
Okay, and Vera asks another great question. If a company doesn't have employees, if you're a solopreneur, can you apply? Is it worth your time to apply if you don't have any employees?
You certainly can apply. You're eligible to apply, and you might want to look at the calculation document I referred to, because it does run through how your calculations are going to be a little different, but it'll show you where to grab the information off your tax returns, your Schedule C, looking at your gross receipts or your net receipts to see what you might qualify for. So you can run through that exercise and see how much you might be eligible for. And then you might want to compare it with other things that are out there. I think the California Resiliency Fund and some other things that are out there to see what behooves you, like what is in your best interest to apply for. A lot of these programs you can apply for multiple, but it is worth checking out to see what makes the most sense for you in your situation and what's going to be the most financially beneficial to you.
Oh, great. And Ayub asked the question, it sounds like he's received $1,000 in the first round of the EIDL, but sounds like he still hasn't received the remaining $9,000. Should that business reapply, or what's your recommendation?
So I presume they're talking about the EIDL grant. And so remember, this is brand new legislation. We ran out of money the first round. I forget when we ran out. I want to say it was like July, maybe even June. We ran out of money. So it just reopened. It just was reauthorized with additional funding in the last piece of legislation that was signed right before or right after Christmas. So the program hasn't officially reopened yet. So if you haven't been, quote, made whole from the first round, I would give it some time. Like this is still a process. They're still evaluating and probably trying to figure out how they're going to push the money out to those borrowers from the first round, and then open up to the second round. So I would say give it a little bit of time. I wouldn't worry about that just yet. As soon as we have more information, we'll be able to tell people, hopefully maybe some time frames and other things to watch out for. But unfortunately, we don't have that information at the district office level yet.
Okay, and just to remind everybody, this webinar is being recorded. We'll have to work with Faye and the BART team, but I believe we'll be able to get that done within 24 hours. And then we'll also be pushing out the PowerPoint presentation to everybody within the next half hour after we conclude. So, Julie, our gross receipts, do they include sub-consultant costs as well? So if you have a consulting business, are you able to include your consultants as the gross receipts?
As I guess it depends on how you do it on your tax returns, because they're largely leveraging the data from your tax returns. So I think it depends on how you actually capture and reflect that in your tax returns for this exercise, for calculating your amount.
Okay, great. And let's see. There's a here, after submitting my forgiveness application to the lender asked me if I should continue and submit the forgiveness application to the SBA for a final decision. Should this person withdraw it when they're planning to apply for round 2? Does that make sense? I mean,
I'm not sure exactly.
okay.
if they've applied for forgiveness for a first round PPP, the first draw, you should let that go through the process. So let it go all the way through until SBA receives it and remits payment in whatever fashion, 100% or a portion thereof, back to the lender. Let that process kind of be separate from what you're thinking about from a second draw PPP loan. And your second draw PPP loan, by the way, can be with the lender you utilize for your first loan, or you can utilize a different lender. The choice is still yours. Obviously, your first lender is going to have all that information, so it might go a little faster and be a little bit smoother. If you choose to utilize a different lender, you might have to provide some additional background on your first loan. But yeah, I would almost treat them like two separate processes, separate but related processes.
Okay, here's an interesting one. So this person was never allowed to reopen their business, so they couldn't use the 60% on the PPP loan proceeds for payroll within the 24 weeks covered in that first period. Will the entire amount of the PPP funds provided automatically revert to a loan payable in 2 years? Yeah,
so if you, because remember, there's a couple of things there to remind people of that. Remember, the purpose of PPP, Congress's purpose in creating this program was to try to keep people on businesses' payroll rather than have them revert to unemployment. So the fact that a business isn't open or has to open and close, or maybe is doing this dance right now that nobody anticipated back in March, but the open and close cycle does not, for the purposes of this program, mean you can't pay your employees. You can certainly pay your employees even if your business is shuttered or working reduced capacity. So that's a separate issue. So when you go apply for a forgiveness, if you can't demonstrate that 60%, at least 60% of the loan funds went to pay payroll, then yes, you will have less than 100% forgiveness. And that loan will be converted into a term loan, at the 1% interest rate, and either a 2-year or 5-year term, and that depends on when you actually obtained your loan, because there was interceding legislation that over the summer that expanded the 2-year term into a 5-year term. So, okay. But yes, and that you should be notified of that by your lender after SBA has received the information and remitted payment back to the lenders.
Okay, great. And again, I think you did cover this, but the question we've seen here on this board, as well as others, if I did get a PPP loan in round 1 and I qualify for what you outlined in round 2, no problem with applying for round 1 and round 2, correct?
Correct. Yeah, just round 2 is slightly different eligibility criteria, kind of narrows it a little bit further. But yes, if you were successful with round 1 and now are looking for support for round 2, absolutely.
Okay, and then you might have said this in one way or another, but do you recommend that we go back to the same institution we worked with the first time, or should we jump ship and try one of the community banks who seem to be maybe even more efficient than the larger banks?
Yeah, I mean, it's up to you. There's pros and cons, I guess, for both scenarios. The first lender is going to already have your information from the first round, so that for purposes of the second loan, it does make it a little bit easier in that regard. They have that info. If you go to a different bank, you may have to supply that info up front, or you may have to supply it, later on. But I would be ready to have that package, all your information on the original application, and if you've gone through forgiveness, the forgiveness information, and be ready to present that to a different lender.
Oh, okay, great. And I love this question. Thank you, Alexandra, for asking this. Can a union shop use PPP loans for fringes paid to the union?
Paid to like union dues, are they talking about?
Yeah.
That's a good question. I don't know if that's considered an employee benefit that is paid by the employer. That's actually a really good question. Surprisingly, that's the first time I've had that question.
I know, so that's actually, Laura, can you please unmute Alexandra Valencia? Is that possible, Laura? And I just want to make sure that we are addressing.
Yes, Sir Alexander can unmute themselves too.
Okay, Alexander, can you unmute? Okay, go ahead, Alexander. Did we capture your question?
Hello, can you hear me?
Yes, we can.
Hi, yes, thank you so much for your attention. Yes, we're paying union dues, which include health and welfare, which is basically health insurance, but it's paid to the union, not to the employee. Their pension, vacation funds,
Okay.
so those kind of dues.
Yeah, so do you in turn get some sort of like receipt or invoice or of such from the union that shows that itemizes what you paid for employees?
Yes, exactly, yes.
Okay, then because it is for substantial benefits, especially like the health insurance and that thing, I think you could use that. So I would make sure you get whatever like report or invoice or whatever you have from them so you can demonstrate to the lender this is the expenses you incurred, that the employer paid expenses,
And
provide benefits.
I'm sorry, does it have to be itemized by the employee?
It would be helpful if you can break it out by the employee so they can see how to whom the benefit is coming, and yeah.
Okay, thank you so
Great.
much.
Thanks, Alexander. So everybody knows Laura is basically cutting and pasting, and she's getting as many questions captured as possible, and then we will be working with Marlo to make sure we get as many answers, kind of almost in a frequently asked question kind of format. So I know we're not going to get to everybody's fabulous questions here, but Julie, let me just kind of round out this last one because we did promise that you would be out of here by 11:30. So with things evolving almost on a daily, hourly basis, is there going to be any, are these dates, like if you apply for the EIDL, are those dates for repayment going to be pushed out 1 or 2 years? Are those kind of changes going to happen, do you think?
Well, we'll see the extended, well, if you apply for EIDL loan, you do automatically get 12 months deferral period. So from whatever date you receive the loans, I should say, you get a 12-month deferral automatically. Whether that'll be extended beyond that, I have not heard yet, but you do automatically have a 12-month deferral of principal and interest payments.
Okay, great. And Michael's going to go to the next slide just so that we can kind of get Julie's contact information. I will tell you, and we've done a lot of work with SBAs and a lot of great organizations. I've never seen anybody so responsive as Julie. So what a gift for us to have with you being the district director. So just in closing, because I know we didn't get to everybody's questions, but we will send out the PowerPoint. We will post the recording of this, and then we will work with Marlo to make sure we get as many questions answered as possible so that everybody's time is used really well here. So thank you, everybody. You jumped on this really quick. We didn't even announce this webinar until Thursday evening, and we've had over 100 people participate. So that speaks to the power of this program and to Julie. So thank you, Maceo. Thank you, BART. And really, thank you so much, Julie. Appreciate everything.
Thank you, everybody. And yeah, stay tuned. There's still more coming. And, reach out to us, reach out to our resource partners too, because they stand ready to help you just as much as we are. And we want to try to get everybody through this, weather this very difficult patch.
Yeah. So thank you, Asian Inc. Thank you, MBDA, and all the other great organizations that are aligned. So with that, we'll sign off and make it a great day, and let's hope for a much, much brighter 2021. Thanks, everybody.